Right, no long intros, let's get straight into it. Today we're talking about something that sounds a bit dry, a bit academic, but it's probably the one thing that separates the pros from the people who lose their house deposit on a meme coin.
Right.
We're talking about backtesting. Morgan, you're the certified brain box on this, our resident CMT guru. Break it down for the people. What even is it?
Cheers, Chris. Look, forget the jargon. Backtesting is basically, it's a dress rehearsal for your trading strategy. You get an idea, I'm going to buy Tesla every time it crosses its 50-day moving average. And instead of just chucking your money at it, you use historical data to see how that would have performed over, say, the last 10 years. It's like having a DeLorean for your trading account.
A DeLorean, I like that. So I can finally test my legendary buy Dogecoin whenever Elon tweets about it from 2021 and see just how rich I should have been.
You absolutely good. You set the rules, the exact entry, exit, risk management, and the software crunches the numbers. The whole point, and this is what the CMT charter drills into you,
Right.
is to make trading an objective process, not a gut feeling. We're moving from, I reckon it'll go up, to my tested model shows a 65% probability of a positive outcome over the next 20 trades.
Yeah.
See the difference?
Yeah. One sounds like my mate Dave down the pub. The other sounds like someone who actually makes money. So that's the what. Let's get to the why. Why is it so bloody essential? My crypto brethren often say the market moves too fast, that the past is irrelevant in a world of protocol hacks and random 100x pumps. Convince me.
That's the exact mentality that gets people liquidated. The first why is defense. It's about understanding the dark side of your strategy. The backtest will show you the maximum drawdown.
Okay.
That's the most painful drop from a peak to a trough your strategy has ever suffered. If your system historically had, let's say, a 55% drawdown and you can't stomach watching half your account vanish,
Yeah.
then you have no business trading that system. It prepares you for the pain.
Okay, that's a heavy hitter. In crypto, drawdowns are just part of the game. A 50% drop is a Tuesday. But if your backtest shows that's normal for your system,
Right.
you're less likely to panic sell at the exact bottom. It gives you the conviction to actually follow your own rules.
That's it. It's about building the discipline to execute your plan. The second why is offense. Is your strategy genuinely profitable, or did you just get lucky?
Right.
A backtest over 1,000 trades gives you statistical evidence. It helps you calculate your expectancy, how much you can expect to win, on average, per trade. It turns a hopeful gamble into a business plan.
A business plan, right. Okay, you've convinced me. But here's the bit I love. Let's talk about how people make a complete mess of this. I see these accounts on Twitter. They post these back tests showing a perfect upward curve,
Oh, yeah.
turning $1,000 into a couple of million. It looks too good to be true.
Because it almost always is. This brings us to the biggest pitfall. Overfitting, or as it's also known as curve fitting. It's my #1 pet peeve. Imagine you find a rock and you want to call it a key. So you spend weeks chiseling and filing it down until it perfectly fits one single, rusty, weirdly shaped lock. It opens that one lock flawlessly, but it's utterly useless for every other lock on the planet.
So people are just tweaking their strategy. Oh, I'll use a 21 period moving average, but only on Wednesdays and only if the RSI is below 32.7 until it perfectly matches the past data.
Exactly.
They've created a key for a lock that will never exist again.
You've hit the nail on the head. They've mistaken randomness for a pattern. The second massive blunder is survivorship bias. This is huge. Imagine you want to backtest a stock picking strategy on the current companies in the FTSE 100. You run the numbers and wow, your strategy is genius. But you've only tested it on the companies that survived. You've completely ignored all the companies that were in the index 10 years ago, but went bankrupt and got delisted.
Ah, I see. It's like judging a school's academic record by only looking at the students who went to Oxford and forgetting about the 90% who dropped out. In crypto, that's a graveyard of dead coins. If you backtest a strategy in the top 50 coins from today,
Right.
you're ignoring the thousands of altcoins that rugged, failed, and went to absolute zero.
Your results are a fantasy.
A complete fantasy. And the final, simple one is ignoring costs. Your beautiful backtest says you're a millionaire, but did you account for trading fees?
Right.
What about slippage, the difference between the price you wanted and the price you actually got, which in a volatile market can be huge? It's like booking a cheap flight and forgetting the airline charges you for breathing their air.
Mhm.
Laugh, those little costs add up, and they can be the difference between a profitable system and a losing one.
Exactly.
So you've got this back test. It's not overfitted. You've accounted for the dead coins and the costs. What's next? You don't just plug it in and go live, do you?
God, no. That's the final hurdle. You have to forward test or paper treat. Your back test was the lab experiment. Now you need a clinical trial. You run your strategy in the live market in real time, but with zero capital at risk.
Okay.
You're checking if the lab results hold up in the real world. Is the slippage what you expected? Does it still perform in the current market conditions?
So the back test proved it did work.
Yep.
The forward test proves it is working. You need both before you can have any confidence to risk your own hard-earned cash. It's not about finding a holy grail, is it?
It's about knowing your system inside and out.
That is the secret. Trading isn't about predicting the future. It's about having a system with a positive expectancy and having the discipline to execute it flawlessly over and over again, even when it's painful. Backtesting is the foundation of that discipline. It's your proof, your business plan, and your psychological coach all in one.
Powerful stuff. All right, everyone, that's your crash course in doing your homework. We want to hear from you. Come join our private chat group. The link is right there in the description below. Hop in, have a laugh with us, and share your own stories. We're all in this together.
Now, here's a question we'd like you to think about. If you were forced to analyze your own trading over the last year, how much of your profit or loss came from a disciplined, tested system, and how much of it came from impulse, gut feelings, and FOMO? Be honest with yourself. We'll see you in the chat.